Hello, my fellow investors, and welcome back to another earnings report video. Now, guys, today we actually had a decent amount of earnings. I mean, we have notable ones here being, Home Depot, we got Agilent Technologies, right, Cardinal Health, etc., etc., etc. However, we're not going to take a look at any of these because, well, let's face it, there's a bunch of people that do them, and I would actually like to take a look at another one that, well, it's come under an unfortunate circumstance, mainly because the company has fallen a massive amount, but the reason for that massive drop is a really terrible situation. So we're going to take a look at that company, and yeah, let's see if maybe we can learn anything, and well, let's actually take a look at their fundamentals and see if perhaps they're not that bad as they're making it out to be. So with that said, let's get started with this analysis. And the company that I'm talking about, it is none other than the company HEI, which it is the company Hawaiian Electric. Okay, so now right off the bat, I'm gonna have to say, man, if you guys are in Maui, if you know anybody in Maui, man, I really do feel empathy for all of you. It's here, I mean, I live in Pennsylvania. We really don't have any like wildfires or anything like that, but I really do want to extend my condolences for anybody who has lost family members or anybody who has been through that trauma. It really, really is a terrible, terrible thing. So with that said, this company Hawaii Electric just got completely nuked based off of, well, the circumstances happening in Maui right now. So I want to take a look at this company because even though it's a terrible situation, at the end of the day, guys, a company is a company, and well, if a company falls due to a circumstance that is not necessarily their fault, well, we might actually be able to get that company at a fairly decent value. So that is why I would actually like to take a look at this company, and we can see this right here that they are, I mean, you guys can see that right there. It is a massive drop from around $39 right before the thing happened to now a current price of $14.79. Just today alone, this thing fell 31.08%. So yeah, we're definitely gonna have to take a look at this one. I also have to point out that there's been a lot of just negative news when it comes to this company. Right? Hawaiian Electric has since declined after S&P downgrades to junk, and I actually have that article pulled up right over here. Hawaiian Electric has since declined after S&P dowgrades it to junk, and well, I mean, you got people saying it's hard to see the company emerging from a tragedy in its current form. You also have like the wildfires destroyed a significant segment of HE's customers base that will take many years to restore, and the credit rating firm, the one that downgraded it actually, says estimated the total cost to rebuild at $5.5 billion, far greater than the company's book equity of $2.2 billion. So all of that, guys, all of that we have to take into account. And well, I actually want to take a look at this company. So let's cover, of course, their earnings, because they actually recently just had earnings on the 7th. We got over here EPS normalized actual coming in at 50 cents, well, both non-GAAP and GAAP, both are missed by 5 cents. Revenue of $895.69 million, beat by $147.15 million. Now, here are their earnings, and well, before we actually go on any further, of course, this will be linked in the description below if you guys would like to read it for yourselves. And also remember that utility companies, guys, tend to be really, really secure, right? They're the only industry, I guess, that can be, that can monopolize, right? They're the only industry that can be monopolies because they have massive regulation when it comes to the government and all that stuff. So just keep that in mind. Now let's actually read this. We got second quarter 2023 net income. Of course, this was released on the 7th, and this was prior, well, this report is prior to the whole thing, right? So we're not going to see any issues when it comes to this report based off the wildfires. But nonetheless, though, we got second quarter 2023 net income of $54.6 million and diluted earnings per share of 50 cents. Utility progressing clean energy transitions and executing well on capital plan. Bank results reflect solid credit quality, strong capital position, and ample liquidity. Wow. Man, did the tables turn, am I right? We got here the quote from the CEO. Quote, "We executed well across the enterprise at both of our utilities and bank this quarter despite a challenging operating environment." Man, okay, wow. Our utility grew net income to $45.3 million, and although operations and maintenance expenses were elevated during the quarter, we expect some of those expenses to moderate on the second half of the year, with full year expenses still expected to be within annual revenue adjustment. allowed levels. The utility is executing well on its capital plan, ensuring the reliability and resilience of our system as we progress our clean energy transition. Reading further, we got Hawaiian Electronic Company's net income for the second quarter of 2023 was $45.3 million compared to $44.1 million in the second quarter of 2022, which is an increase primarily driven by the following after-tax items. We got $11 million in higher revenues, consisting of $7 million from ARA mechanisms, $2 million from the fossil fuel cost risk sharing mechanism, $1 million from the major project interim recovery mechanism, and $1 million from one-time true-up billable costs, and $2 million higher allowance for funds used during the construction related to increased capital expenditures. And then you also have here the items that were partially offset by the following after the app. And right over here, you got items that were partially offset by the following after-tax items. So you got $9 million in higher operations and maintenance expenses, $2 million in higher interest expenses due to increase in borrowings, and $1 million in depreciation expenses due to increased investments to integrate more renewable energy and improve customer reliability and system efficiency. Now, we also got over here American Savings Bank. I'm not really going to go into this. Nonetheless, though, guys, I do want to come down all the way here to their forward-looking statements because, well, I want to know what they got going on. Now, this is probably going to be a whole lot different after the current event. Nonetheless, though, let's read. We got this release may contain forward-looking statements. Okay. Oh, never mind. This isn't anything. Okay. Never mind then. Never mind. I thought that this was it, but all right. Never mind. So, yeah, again, this will be linked in the description below if you guys would like to read it for yourselves. You got all of the itemized things here. Again, please do your own due diligence. With that said, let's now jump into the discounted free cash flow and the spreadsheet. All right, everybody. So here we have the book value calculator. Obviously, it's a utility, so you have to use book value. So we got the ticker for HE, market cap of 1.6 billion, a PE of NA. Now that's a little bit concerning because, well, we just saw their earnings. There's nothing really in the negatives. I think the reason why this is the case is because, well, of the Maui thing, right? So if that's the case, then this doesn't seem too bad. And of course, the current share price of $14.79. Now, I know we just saw this graph. However, we can see here that the low on the 52-week it is $14.49 and the high is $44. I want to take a look at this on the 5-year because you guys can see that this company, you know, aside from, I guess, COVID, aside from COVID, this company has just gone nowhere. It's really, really remarkable, honestly. And only as of now, it's when we're seeing this massive drop. In fact, if we go on the 10-year, we can see that it's been slowly increasing again prior to COVID, but then it's just been really, really bad. So again, this may present itself as a really, really good buying opportunity right now. Coming back over here, we can see that they do pay out a dividend of $1.44, which it is a whopping yield of 6.71%. Obviously, the share price collapsed, right? A payout ratio of 67.94, a 5-year CAGR of 2.75, 4 consecutive years of dividend payment. Ex-dividend date is actually, wow. So when you guys see this, oh man, I actually might release this a little bit early, just so that way you guys can see it before close of Wednesday, because the ex-dividend date is on August 17th. Payout date will be on September 8th, and of course they do pay their dividends quarterly. Coming back over here, and of course based off of their current shares standing, they pay out $157.82 million. Coming down to the fundamentals, we got the net income of 5 years ago of $201.8 million to today of $228.8 million. That is an increase of 13.38%. Guys, this graph looks actually somewhat good, right? All except for 3 years ago, and also the decent, I guess, decrease from 2-1 and today. But you can see that this decrease over here is definitely coming back to this median of the 5 and 4 year ago. So that's why I'm going to give this a 70%. Looking now into the total revenues, this one actually looks really good. We can see that 5 years ago, 2.86 billion to today of 3.885 billion. That's an increase of 36%. Obviously, COVID hit them, but then 2 years after that, right, as of 1 year ago, they brought it up a significant amount. So overall, I'm going to give this graph, guys, a 90%. When it comes into the shares outstanding, this one has been consistently increasing by a really, really small rate. We got 5 years ago of 108.9 million to today of 109.6 million. That is an increase of 64%, sorry, 0.64%. And overall, guys, seeing that this is consistently increasing, but not at a massive rate, less than 1%. I'm going to give this thing a 75%. Looking now into the assets minus the liabilities, consistently in the positive, all except as of 1 year ago where they dipped a little bit. And as of today, well, when we saw this, that their total equity is based off of around 2.2 billion. It's actually 2.3 billion. So this doesn't look too bad. Overall, though, because of that dip, and I think that we're going to get a lot more of this dip, I'm going to have to give this a 55%. All in all, though, when it comes to the overall assets, we got 15.1 billion. Liabilities, it is 12.77 billion. Doing this difference, we get $2.3 billion. And when looking at the total grade, we can see the net income of 70, revenue 90, shares outstanding of 75, SMS liabilities of 55, overall grade of 75%. It's a company that honestly isn't looking too bad. The problem is, well, all of those fundamentals that we just saw, be prepared for everything to just collapse, right? Everything to collapse, the net income, the revenue, the assets, especially the assets minus liabilities, they might bring that into the red, and the shares outstanding to skyrocket because, well, with all of that negative news, they'll probably have to issue a lot of shares. So this is subjective to a lot of things, guys, a lot of things. Just keep that in mind when you make this analysis for yourselves. All in all, though, a 75, not including the Maui thing, you know, it's looking like a decent company, but at what price do we buy it at? And for that, we use the book value and get a load of this, guys. Get a load of this. As of today, $20.52. Wow, okay, based on the book value. And then on the tangible book value, we got $19.77. Again, with a current share price of, well, $14.79, we can see that this actually isn't looking too bad. Now, if we take a look at this prior to the collapse, guys, well, this wasn't a buy. Yeah, look at that. This was not a buy. You can see that right there. It was around $39. So, yeah, again, it's terrible for what happened. But based on a book value perspective, well, this actually may be a pretty decent buy at this very moment. In fact, the ratios tell us this, right? Price divided by current book value, we got 0.72, and price divided by current tangible book value is 0.75. Anything under 1.00 is considered undervalued, so right then and there is the proof. But of course, please be very, very wary. Do not buy into this company just because it's saying it's undervalued from a book value perspective. Because at the end of the day, guys, this Maui wildfire stuff is going to hit it hard. So they actually may lose this book value. Well, they actually might lose a lot of dollars when it comes to the book value very, very recently, right? Very, very soon. So it really is going to come down to a lot of perspective. Again, if you guys are interested in this company, please be very, very wary. It's looking like a great buy right now, and they do have the past to be like, all right, well, this is a terrible thing that just occurred. However, in the past 5 years, even during COVID, they were able to sustain themselves, right? So all of that is looking in the positive for them. And a lot of people are saying that, you know, it's going to be a bad thing for them. But honestly, if it comes out that they weren't the cause, or, you know, they were just doing their job and they weren't the cause for any of the wildfires, or at least very, very minimal, well, it may actually not be that big of an issue. So again, very, very difficult company to analyze based on the current circumstances. This reminds me a lot of the Chevron ExxonMobil when crude oil went negative. Right? It was a massive, massive drop, and well, it was out of their control. So this might be a similar situation, not on the same scale, however, based on the fact that it's not, it wasn't in their control so far from what we know. So please do your own due diligence, guys. This is not financial advice, and every investment is the present value of all future cash flow. That's why all these calculators are available for free. Please use them. All we ask for in return is just like, subscribe, comment, and of course, share. We really, really do appreciate it here on YouTube as well as Rumble. Now, if we take a look at this dividend, putting in $5,725, guys, with a 6% yield, this nets us a whopping $557.43. However, word of caution, they may actually cut this dividend because they may not have enough cash to do all of the repairs, right? $5.5 billion in repairs. So again, this dividend is looking good, but remember that it may actually get cut, believe it or not. And I would not be surprised if it does. And looking at the options change for August 18, 2023, we can see that on the puts, well, there really much isn't anything. However, on the call side, this is looking actually rather decent. However, if we take a look at September 15th, yeah, their option shades aren't really that good. We can see that on the put side, guys, for $5. If you think that this thing is going to go lower, guys, you could own this company for $5,000, well, 100 shares of this company for $5,000, and you're getting paid $45 for that. And even if it goes to $10, you know, that is $150 premium. Now, if this thing goes up, right? Oh my lord, look at this. If you buy the 100 shares of this thing at 5, this might be a really, really good one to do the covered call and cash and put wheel strategy, believe it or not, assuming that it of course reaches this low point, and of course that it rebounds to a price of like $20 to $22, $25. So all in all, these are the option exchange for August 18th and September 15th of 2023. So when it comes to this company, again, terrible news for what's happening in Maui. And, you know, my condolences to all of them. However, guys, at the end of the day, well, we can actually use circumstances like this, as terrible as they are, to actually, well, you know, buy some great companies. I mean, it really, really is I don't want to say a terrible thing to say, but it's just reality of the world. When circumstances like this happen that's out of people's control, well, you can either, there's multiple things that you can do, right? And I would suggest everybody, of course, help, being the first thing. But when it comes to a financial perspective, you know, you have to take a look at these companies and analyze them in order to come up with, you know, a fair value and see if you want to buy them. So that's just my 2 cents when it comes to this. And of course, tell me what you guys think. Are you guys going to buy this company? Are you interested? What do you think? Tell me. And if you're interested in buying it, tell me at what price you would actually think this thing might fall to. So with that said, guys, that pretty much is it for this one. You guys can follow us on new tech sites, link is in the description below. So with that said, peace out, and we'll see you all next time.